And as promised today, viewers, we have 14 stock picks lined up for you. And also, remember, it's our 14th birthday. We will bring on board our guests for today. We have Kunal Bothra as well as Avinash Gorakshekar joining us on the show. And not just Kunal, Avinash, we will also have picks coming in from Rajesh Agarwal, Shahina Mukaddam, as well as Ashish Kapoor, A.K. Prabhakar, as well as Hemen Kabatia. So you have a battery of guests, a battery of experts giving you top stock picks. But first, let me come to you, Avinash, and what's your top picks for our viewers, given the fact that it is our 14th birthday? We've decided to give our viewers 14 stock ideas.
Yeah, I think good morning, Cheryl, and I think best wishes to ET now for the 14th year. Many more years of viewership since your channel is doing a great service for investors all across India. I have two picks today, Cheryl. The first pick is from the auto component sector. The company's name is Sterling Tools. This is the second largest fastener company in India. Has a very good marquee customer base like Mahindra, Ashok Leyland, Tata Motors, Daimler, and many more companies within the commercial vehicle, two-wheeler, and the farm equipment and the off-road space. They've done very well in the year FY23 with a revenue of almost 775 crores, EBITDA of 100 crores, and a bottom line of 50 crores. Our sense is that looking at the buoyancy in the commercial vehicle market and the passenger car market, FY24 also looks very strong. In fact, they have made a very strong inroad in the electric vehicle market also. So I would believe that over the next 8 to 12 months, one could expect a top line, a target price of at least 425, 450 here. And the second company is a very interesting company. It's a turnaround company by the name of Imagica Entertainment World. They run one of the largest theme and water parks in Khopoli, which is near to Pune. And recently, the company has turned around significantly. They have done a top line of 250 crores and a EBITDA of almost 85 crores. Now, what is interesting about this company is that the company has executed a complete debt resolution plan. Debt has come down from 1400 crores to hardly 2 crores. In fact, yesterday, the company announced that unsustainable debt of 572 crores has been written off. So I think now going forward, there's going to be a lot of growth for this company. There's a lot of operating leverage available. So I would believe it is available at a very attractive risk reward price at around 40 to 46 rupees. Our expectation is that the company should easily record an earnings growth of at least 15 to 20% consistently for the next 3 years. So we have a target price of 78 over the next, say, 12 to 15 months.
Okay, so those are the two recommendations coming in from Avinash Gorakshekar with the time and investment horizon of 12 to 15 months, and the two bets are Sterling and Wilson as well as Sterling Tools, I beg your pardon, as well as Imagica Entertainment. Sterling Tools for a target of 425 and Imagica Entertainment for a target of 78. But Kunal, coming to you, you have been an integral part of ET now. Congratulations to you as well, because every day we get you in the studios. But for the times ahead, what are your top recommendations for all our viewers?
Thank you so much for that, Srishti, and once again wishing ET Now, all the staff members as well as all of you guys and the viewers a very, very happy 14th birthday, and wish to have a lot more birthdays going around. Now, for in terms of the picks, the two picks which I would want to highlight, and the time frame which I have for these picks depends on the kind of risk appetite for every trader. But then two stocks which I would want to highlight. First is AB Capital. The stock looks extremely attractive on the short as well as on the medium term charts. Now trading at I think 175, 77 odd mark. Looks attractive for a target of 200. My belief is that the setup for AB Capital over the last 3 months, 6 months has been extremely positive and indicative that this could be a possible multi-year uptrend for AB Capital. So that's a buy. Short-term targets could be kept closer to 200, stop us at 165. And SBI, now we all know that most of the PSU banking stocks have actually underperformed in this leg of the market trend. But I believe SBI could be a top stock from current levels. Would suggest a contra buy, targets of 625, stop us at 550.
All right, so those are the first two picks coming in from Kunal. We have two more picks that Kunal will give us very shortly. It's a buy on SBI, target of 625 rupees per share. Buy on AB Capital, target of 200 rupees per share. But as promised, let's actually hear out recommendations coming in from our fundamental experts as well as our technical experts who you see on our show quite often. So let's listen in from the bets, listen into the bets coming in from Shahina Mukaddam, Rajesh Agarwal, Ashish Kapoor, A.K. Prabhakar, as well as Hemen Kapadia.
Congratulations, ET Now. Phenomenal 14 years gone by. and I wish you the very best for the coming long term. In the medium to long term, I have two picks for your viewers. They are both small stocks, which I hope in a medium term will become medium to large cap stocks. The first one is BSE Limited. There I have a target of 650 for the medium term and a stop loss of 520. And the second one is Vadilal Industries. There I have a target of 3,250 for the medium term with a stop loss of 2,000. Now, briefly to discuss them, BSE Limited, I mean, of course, everybody knows it. And today it's in the limelight because it sold 5% of equity of CDSL now for about 550 crores. That puts the value of investments close to about 1,500 crores. If you exclude that from the market cap of the company, the turnover to market cap currently is just 5 times, which shows you that there is value in investing at current levels for the medium to longer term. Second one is Vadilal. There it's a small cap stock, market cap lesser than 2,000 crores. They show strong growth. If you see the last quarter numbers, 20% growth across all parameters, revenue, EBITDA, profits, 20% plus growth. And for the full year, the profits were more than double. I think there, if you see the balance sheet, very strong balance sheet, their return ratios, ROC, return on equity, everything is above 20%, which shows that it's got a strong balance sheet, strong brand, and I hope that this will translate into better performance in terms of stock price. So I personally hold both these stocks from quite some time, and I believe that these are good investments for the medium to long term investor.
Wish 18 now a very happy 14th. I remember doing trial shows some time back and just looks like yesterday, but still 14 years have passed. A very happy birthday to ED now. And I would recommend two stocks on this occasion. One is Astral Poly. This is India's largest plastic pipe manufacturing company, and we have seen a sharp growth in their plastic and adhesive division. Demand is coming back into the economy, real estate, and this is going to help this company giving back good numbers. Raw material prices have gone down, and there have been strong volume growth too. This is a cash-rich company, debt-free, with almost 500 crore cash in their kitty that helps into their inorganic growth. They have moved into storage tank also with a capex of 100 crores. So all in all, this company looks very good to encash the kind of real estate boom or infrastructure boom we are witnessing. And we expect a target of around 2,300 in the next 1 year. And the second one would be Graphite India. And this company can be a proxy for steel play in the country. Steel industry is showing signs of recovery. This company is 6 plants in India and 1 in Germany, with a capacity of 98,000 tons per annum of electrode. There are two positive points going for this company. One, the raw material prices have gone down. This company uses needle coke as its raw material, and with crude prices going down to 72 odd levels, I think needle coke prices are going to help this company report better numbers. And the second one is with decarbonization. Most of the steel industry is trying to move to electric arc furnace, so that again would spur the demand. The numbers have been bad in the recent past, but going forward, we believe that the numbers are going to recover. Hence, we recommend this as a buy for the next 1 year.
I would like to wish ET Now a very happy birthday. It has been a great 14 years. And on this occasion, I think one can look at market for fresh ideas. My 2 stock ideas for investors are from the large cap space. I think large cap space itself is giving great opportunities. One idea is the bellwether Reliance Industries. I think Reliance Industries at the present juncture presents a very good risk-reward paradigm. The stock, after a huge re-rating in 2020, has been in a sideways range over the last 3 years. It has many verticals now. It is a very well diversified company and presents multi-fold opportunities in the digital space, in the retail space, telecom, as well as oil and gas industry. So I think altogether the platforms have huge value embedded in them. and one can expect this value to get realized over the next few years. So Reliance from here presents a very good, safe and steady money-making opportunity going forward. The second large cap idea, the second idea again from the large cap space, HDFC Bank. Again, this stock has been kind of underperforming, which is very unusual for HDFC Bank to underperform, but it has been underperforming the market over the last few years. The stock is relatively, cheaper placed right now, cheaper valuation in terms of what it historically has commanded. The reason has been some sort of concern over the pending merger with HDFC. The merger process is nearly complete, and one can expect the stock to come back and start performing in line with the market, and in fact outperforming going forward from here.
Two stocks we like. One is Rolex Ring. Rolex Ring operates in two segments. One is bearing rings, which forms almost 52% of their revenue. The other one is automotive components, which forms 48% of their revenue. And companies, most of their revenue comes from export. 60% is export and 40% is domestic. And most of the bearing makers source it from Rolex Ring. So there are multiple opportunities here. As economy is picking up, we feel the opportunity is immense. And very important is their product quality is also very good, and their EBITDA margin is slightly above 20%, and management has guided that it will scale up in next few years also. China Plus One is a huge opportunity for this company, as many OEMs are trying to resource from India. So Rolex Rings has a very big opportunity. So I think if somebody is looking for 1 to 2 years, Rolex Ring will be something which will give a very good return. The second stock is Kolte Patel. It is a real estate company which operates in 3 markets. One is Pune, which is a major market for them. Next is Mumbai, which is the second largest market, and Bangalore. They have a debt of 112 crores. In real estate, having a low debt is very important. They are operating on asset-light model. And in Mumbai, most of their projects are redevelopment. Recently also, they got 2 redevelopment projects in Mumbai. And their sales value has almost doubled compared to last 2 years. So they did a sales value of 2,232 crores. So, and the business development which they are doing, they say almost 12,000 crores would happen in the next few months. So already they have a huge potential. I think real estate companies are likely to do well as our economy picks up. In that being this Kolte Patel being a very small company with 2,500 market cap and manageable debt, and their Life Republic is one thing which is a cash cow for them. I think this also offers a very big upside in the next 1 to 2 years.
I have 2 stock recommendations. The first one is a buy call on REC. REC has been consolidating for 12 years now. It is on the verge of a major breakout above 155. We are at currently 151. So one can buy REC at around 150 with a stop loss of 125 and a target of 200. This is a 6-month call, a slightly longer term point of view. The second stock is on which I have a recommendation is PVR Inox. Deeply oversold, positive divergences, crossover buys, medium term bottom in place. So one can buy PVR Inox at around 1490 with a stop loss of 1450 and a target of 1590 from a positional point of view for a period of 6 to 8 weeks.
14 stock picks that we've got from our experts for you today. We have Rajesh, who likes Astral Graphite India, Ashish Kapoor likes RIL as well as HDFC Bank, AK Prabhakar is Rolex Rings, Kolte Patel, Hemen likes REC, PVR Inox, Shahina Mukadam is BSCM Vadilal Industries, and Avinash likes Sterling Tools, Magica Entertainment, and we know that Kunal like SBI as well as AB Capital. But yes, as promised, we have bonus 2 more stock picks, so that means 16 stock picks for you. And Kunal, which are the other 2 stock picks?
So 2
Buy calls, both from the private sector banking names of different market size. The first one is about IDFC First Bank, looks extremely attractive for a target of 88. Would recommend a buy with a stop loss of 76. And HDFC Bank is a very strong contra buy at current levels of 1600 approximately. Targets of 1720. So expecting a new high on HDFC Bank. Stop loss at 1544.
All right, so those are the top picks coming in from Kunal as well and from Avinash as well. Thank you so much, Kunal, Avinash, for joining us on the show. And